we are discussing the expansion of the sales tax base by the imposition of tax on consumer and/or business services. Although many states currently tax some services, several states are considering expanding the sales tax base by imposing sales and use tax on consumer and/or business services. When sales tax codes were originally enacted, generally in the 1930s and 40s, the economy was based on the purchase of goods. But since the late 70s, the economy has shifted toward the purchase of services. Both consumers and businesses need and use intangible services. There is a distinction between consumer and business services. Consumer services are provided directly to individual consumers and are concentrated on the personal needs of households or individuals, such as services provided by personal trainers, hair salons, and transportation providers. Business services, on the other hand, are provided by one company to another. Such services support business operations like marketing, advertising, consulting, data, or IT services. Although some states will consider carving out an exemption for business-to-business services, other states may include both consumer and business services within the definition of taxable services. Today, we consider a few state proposals to expand the tax base in this way. In February 2025, legislators in Maryland introduced House Bill 1554. The bill would have imposed a 2.5% sales and use tax on specific services if both the provider and the buyer of the services were businesses. Under the bill, the definition of taxable services would have been expanded to include data or IT services, system software or application software publishing services, consulting services, lobbying, public relations, or marketing services, and financial planning or tax preparation services. The bill's fiscal and policy note stated that expanding the state sales and use tax base to include certain business-related services could increase state revenues by approximately $944 million in fiscal year 2026 and by $1.4 billion in fiscal year 2030. However, Maryland House Bill 1554 failed to advance in the legislative process. Maryland legislators didn't stop there. They also introduced House Bill 352, the Budget Reconciliation and Financing Act of 2025, which imposes a 3% sales and use tax on data or IT services and system software or application software publishing services. Maryland House Bill 352 was enacted and signed by Governor Westmore on May 20th, 2025. Other state proposals to expand the sales tax base include, in Illinois, a coalition of policy and civic leaders released a report on March 19, 2025, entitled Modernizing Illinois' Sales Tax, a Pathway for a Sustainable Future. The report advocates expanding the sales tax base to include consumer services. It notes that the system primarily taxes goods, despite the reality that consumer spending has shifted significantly towards services over the past several decades. The report argues that expanding the sales tax base to include consumer services could generate nearly $2 billion annually. In addition, the report encourages the inclusion of an exemption for business-to-business services to maintain economic competitiveness. In Minnesota, Governor Tim Walz proposed a 2026-2027 budget in HF 2437. The proposal sought to broaden the sales tax base to encompass various professional services, including legal, accounting, brokerage, and certain banking services. This expansion aimed to modernize the tax code to align with the state's increasingly service-based economy. The bill was introduced in the House on March 17, 2025. On May 7, 2025, the committee report advocated the adoption of the bill as amended and to re-refer it to Ways and Means. However, there was a motion made to lay this legislation on the table, and the motion prevailed on May 13, 2025. In Washington, the legislature passed Senate Bill 5814, which expands the state's retail sales and use tax to sales of digital advertising services and a range of high-tech and IT services that are primarily purchased by businesses. The bill was sent to Governor Bob Ferguson on April 27, 2025. However, on April 28th, the Council on State Taxation emailed the governor urging him to veto the bill, citing concerns about expansion of the tax base to business transactions. Governor Ferguson signed the legislation on May 20th, 2025. In conclusion, as long as there are million or billion-dollar state budget shortfalls, it is likely that states will continue to explore the expansion of the sales tax base by imposing sales and use tax on services.